All right, everybody, welcome back to another episode of the Crypto 101 podcast. I am joined live and in person by Alex Zozos, who's the general counsel of Superstate. We're here in Austin, Texas, sweating our tushies off. How are you doing today? Thanks for joining us.
Yeah, great. Fantastic to be down here. It's my first consensus, so I'm a noob to the whole experience, but the energy's palpable, and it's an exciting time to be here and be in the space.
Absolutely. Yeah, we've been coming to consensus for now 5 years.
Wow.
And I heard they're going to tear down the Austin Convention Center. And so I don't know where we're going to be next year. They're rebuilding it, apparently.
Wow, did not hear that. So happy to be here to see it out, I guess.
Exactly. Well, look, so Superstate is doing a lot of incredible work in the real-world assets sector of the cryptocurrency industry. Before we dive deep into that and unpack it, I just want to get acquainted with you, a little bit about your background, and how you came to be the general counsel of this asset management firm.
Sure. So I've been at Superstate now since January. And before that, I was at Coinbase and then was in private practice and started my legal career at the SEC. But yeah, I mean, it's kind of one of those things where looking backwards, a lot of things aligned that really, looking forward, make a lot of sense for my position now at Superstate. And so, at the SEC, worked on a lot of plumbing and how the markets work and function. Then in private practice, worked with a lot of fintech startups, and then at Coinbase really got super deep in the developing space of crypto, and so yeah, I mean, looking at the promise of blockchain technology and distributed ledgers, the main thing that you can probably do with them, there's plenty of them, but one of the great things is to use the distributed ledger technology to serve as a distributed ledger of ownership.
Right.
And so that's what Superstate is doing. And so like my background in securities, coupled with my experience in crypto has really gotten me super excited and thrilled to kind of help drive utility on chain at Superstate.
I love it. And we need it. We need folks like you who have been on both sides of the fight, if you will, truly. I mean, what's going on in Congress and in the agencies, it seems like a fight, and we're going to get into that.
Sure.
But I want to know, Superstate, at a high level, what is Superstate? What's your mission? What are you guys trying to accomplish?
Yeah, I mean, so we're a tokenized asset manager, and what we're looking to do is really take real-world assets, or assets that are off-chain, and put them on-chain. And what really is fascinating about this moment in time is the underlying, how trades interact with each other happens at a rapid pace. But I mean, just announced yesterday, we're finally moving to T+1, which is as fast as things were moving in the 1920s. And so if you were designing the system from whole cloth, you wouldn't create a system that we have today.
Right.
There's a number of intermediaries, there's a number of layers of ownership, like all of the securities that are owned in the world, in the US today, are really owned by one company called CD&Co. They're not owned by the individual investor, right?
Oh, wow, that's a name I've never even heard.
It stands for Certificate Depository Company, but CD&Co. And so everyone else is beneficial owners, but doesn't actually own their assets. And I'm like leaving from Coinbase, I wanted to move some of my own shares to another account. And it was a convoluted and complicated process. Where what we're looking to do at Superstate is really peel back the layers, the intermediation, and the complication, and rely on the technology to allow for yield in a legal way to live on the blockchain and to move, from myself to you, so long as we know and trust who we are and that we meet the qualifications.
Awesome. So that's a great starting point. In your flagship product, it launched earlier this year. It's called USTB. And it not only just launched this year, it's already got over $100 million of AUM. So describe what this USTB product is.
Yeah, I mean, it's not a complicated product. It's a quite simple product. It's essentially a tokenized money market fund, but it's not a money market fund. It's a private fund in regulatory parlance, but it technically holds treasury bills and keeps them in a trust, and then we issue tokens that live on the Ethereum blockchain for now, and those tokens represent that ownership. And so you have a share in this vehicle, and so you have a security that can appreciate in value that lives on chain.
Wow. And so if people think about, holding this token, the main benefit, like you said, the value accrual, the legal yield, and yields are high right now. They're about 5%. I mean, I know back in, the 80s, or maybe they were higher,
Sure.
And they've been down at, almost 0% rates now. And, so 5% rates are awesome. And how do we make sure that, like, the USTB holders are actually getting that 5% yield that the same government bonds have? And trying to go buy a government bond. Have you been to the website to try and buy a government bond? If you guys go, it's a nightmare to try and buy a government bond directly from the government. I'd much rather do it from a tech wrapper, basically. But
yeah, no, I mean, we have a great legal structure. It's pretty vanilla. Other funds use a similar structure, but it's a Delaware chartered trust that essentially takes custody.
He's from Delaware.
Represent Delaware, yeah, the first state. I mean, the trust takes them. They're held in custody at the treasury securities are held in custody at a third-party bank, and it's really quite vanilla version of that. But the yield, which is a little different, as the value of the treasuries pay interest and accrue, the trust's net asset value increases, and so each individual token itself is worth more, on a daily basis. And so right now, I think it's yielding around 5.3%. So what we do, I mean, it's been said by many in the tech industry, is, many people's margin is our opportunity, right?
Totally.
And so we're just operating a pretty straightforward fund. The only unique thing, and cutting out a lot of the middle pieces, the unique thing is we're using crypto, and I think this is an interesting thing to kind of take a step back on, is like, what is crypto, right? Like, we're viewing Ethereum as infrastructure, and I think that's what it is. It's an incentivized infrastructure that can validate transactions.
Yep.
And so we use Ethereum and an ERC20 smart contract to represent that ownership, and then if you move that around, because you can take anything and tokenize it, but we have now enabled the ability for whitelisted addresses to transfer amongst themselves, and so that is a leap forward in trying to bring utility in allowing true ownership and transferability on a peer-to-peer basis to anyone that is on that whitelist.
Yeah, and so I want to talk about that. I want to know how I could get on the whitelist, or folks at home can, and if there's maybe a higher tier of threshold, when does that potentially get lowered so that anybody could access it?
Sure. Yeah. I mean, like right now, it isn't open to everyone. So if you're a qualified purchaser, which means you have a significant high net worth, and in legal terms you can fend for yourself, you're able to participate in the fund. But that's not the vision that we have for this going forward. Clearly, we would want everyone in the world to be able to participate in this and to be self-sovereign and own their own assets and move them as they please, and then use them. We haven't touched on this, but like the true utility of owning something is, one, you can move it around, but two, you can use it as collateral.
Totally.
And so we would like for everyone to have that capability, but right now, given the restrictions and what is possible from a regulatory standpoint, we believe at this point, it's only available to a small subset of individuals. But in the future, and Superstate previously had filed for a registered product, a registered fund, that would allow this to be more widely used by retail and everyday investors. But I think where we're at right now is building this out, proving the concept, and so it's not available for everyone just yet, but we're marching down that path, and given some of the recent changes in DC, I think we could be much sooner and closer to that than we had anticipated even just a week ago.
Yeah, I definitely want to get into that, especially with your background, your expertise. I think we could do an entire new podcast on just that stuff alone. But I want to actually go back to the USTB token. The number, quote unquote, the number goes up based on this interest that's accruing.
Sure.
So does this mean that like every day, people are getting an airdrop or they're getting some kind of distribution? There's some taxable event every single day that people need to track and keep, and also I guess a follow-up question to that is, if yields go down, does the price of the USTB token also go down?
No, because I mean, the only scenario in which that would happen would be if rates went negative, I guess. So
okay.
if for whatever reason the yields are negative, and that did happen in Europe in the ZIRP era, but it has never happened in the United States. But essentially, the trust has all of the securities. Treasuries are securities, and those securities accrue a daily value, and then that value from interest payments, and that value then is included in the trust. So the trust, each share of the trust goes up in value, and we actually have, you can go to our website, you can see the steady climb of the net asset value of the share. So if our initial net asset value was $10, now it's 10 and some change, and that difference between where we initially offered the fund and where it's at now is the growth in the value of the token, and that will continue to appreciate. But again, there's no taxable event that's happening. It's until you sell
the USTB token.
Correct.
That's awesome. That's fascinating. I like that. So if we fast forward in an ideal world, and I know there's some regulations that are just sticking points, and we'll get into that. But like in an ideal world, paint us a picture. Is USTB, like you said, it could be used as collateral. In an ideal world, you could go and plug it into a system like MakerDAO or Compound, which the founder of Compound also founded Superstate. So there seems like there could be some interplay there.
Yeah, I mean, that's definitely our ambition. Our ambition is, again, for individuals to be able to do and derive value from their assets. Right now, I mean, in the system that we live in, your Schwab account has your securities, and you're in a closed loop system there, right? The only value that you can derive from that is potentially borrowing some money from Schwab. But it shouldn't necessarily be a closed loop system. Those are your assets. You should be able to go into the marketplace and determine what you want to do with them. You can keep them in your self-custodial wallet. You can keep them at a custodian. You can potentially put them in a DeFi protocol. We're not there yet, but that is where a lot of it falls on myself and
move faster, work harder.
A crackpot team of great outside counsel attorneys to really try and determine and figure out how to make that possible. But I think my background as a regulator kind of helps with understanding how we can unlock that challenge. And what it comes down to is really looking at things in first principles and understanding why certain rules and regulations exist, and then making sure however we operate and whatever we're offering meets those standards from a principled basis, rather than a prescriptive basis of needing to have something done a certain way because it's always been done that way.
Right.
It's why do we need to have this? How is this carrying out the tripartite mission of the SEC to protect investors, facilitate capital formation, and have fair and efficient markets? So that's what we really want to drive towards and make sure that the SEC can do its job and we can enable and unlock additional value for the investors and the consumers.
Absolutely. And it's not just you, and I want people at home to understand, it's not just Alex and his team at Superstate, pounding the pavement. It's getting to be a very, very large cohort of asset managers that are following in your footsteps. BlackRock, which is a direct competitor to you guys on this product. But once you have BlackRock in the fight, they're trillions of dollars of assets. They're, how many lawyers do they have? I'd imagine, hundreds. You get to this point where you reach critical mass of this idea, and we're all fighting now. And it seems like for the past couple years, crypto was losing, and we were just getting beat up. But it feels like it's the third act of the story now, where the hero is now starting to rise up and fight back and actually see noticeable gains. Does that kind of resonate with your viewpoint? Do you see some momentum here in the crypto market?
Yeah, I mean, I think there's definite momentum for a number of reasons, right? I think like the mantra of like the institutions are coming, right? The institutions are here, right?
They finally arrived after all these years.
And that's fantastic. And like the desirability to invest in blockchain-based assets like the Bitcoins and the ETHs, with the ETFs both being approved, and then the demand that followed up on those, that is a great hallmark of confirming that this industry is not going anywhere.
Totally.
I think we're at Superstate trying to take that to the next level. So what that was doing was taking traditional financial packages of the ETF and allow access to crypto assets.
Mm-hmm.
What Superstate is doing is taking traditional assets and using that infrastructure that is Ethereum.
It's swapped.
It's moving the other way, exactly. And it's doing that because the underlying rails of the traditional market structure are dated, and we wouldn't design the system in this way but for the paperwork crisis in the 70s. And so now we have this technology that can unlock that value, and it's just a matter of moving that forward and continuing to prove that out. So crypto assets, Bitcoin and ETH, they're not going anywhere.
Yeah.
The SEC knows that Ethereum itself is not a security, Bitcoin itself is not a security, and the pieces are falling into place with USDC is now available. So you have a vibrant stablecoin market. So cash is now on Ethereum. Mm-hmm. We're looking to put securities on Ethereum. And at that point, you have both the payment mechanism and the security mechanism on the same operating system, and that has never happened before. And so all of these pieces are coming into place. You alluded to the high interest rate environment. That also is a driving factor in motivating and moving this forward. And so all of those pieces falling into place have led to this crucible moment, which is fantastic. But we're down to consensus, and RWAs are a hot topic.
Everybody's talking about them.
And that's it's a great time to be in the space. And I think it's the next step to fall is, rather than having a regulator that says they're tech neutral but is really pretty adversarial and regulating by press release, I think we're moving towards a place where we do have credible engagement, and we're engaging. I mean, I'm a former SEC employee. The BlackRocks and then the institutions are having some of these challenging conversations where we're not talking about, is this going to exist? It's going to exist.
Yeah.
How do we make sure we bring it about in a mature and principled way? And I think that is what's super exciting and what has us fired up.
Totally. And I want to dive in to that, former regulator, right, working at the SEC. How does that inform your sort of day-to-day operations? Does it change the way you think? I mean, you've been inside the castle, now you're on the outside of the castle. Well, does it change the way you think at all?
I don't think it changes the way I think. I think I'm a lot more sympathetic maybe to some others that work in the space. Because as a staff attorney at the SEC, you realize that everyone there is mission driven and is looking to get to the right answer. Mm-hmm. And so
they're trying their best.
They're trying their best, and I think I have a lot of empathy there. I do think, is working for us now. It's worked against us in the past, where some of the political influence that has come down from a top-down approach has made it challenging to have a more engaging conversation. And it wasn't always that way. So the staff is there. They're still doing great work. Some of the political clouds that are influencing some of those decisions, I think, have made it more difficult. Mm-hmm. But I think there's a groundswell of interest in engaging in productive ways with the commission. And I think if you look back, one of the reasons I got into this space is like a student of history and seeing how things change and evolve.
Totally.
And so I always think, the arc of regulation is long, but it does bend towards getting to the right place.
Totally.
And so, we have the deepest and most liquid financial markets in the world. There's a reason for that. The SEC doesn't want to screw that up, and neither do we. Mm-hmm. And we see a way to improve and unlock additional value. And so we're going to get to a place where those minds meet. And I think we haven't fully touched on it, but this last week has been insane with, and kind of shows, again, the system works. You just have to be patient, where essentially there has now been proven bipartisan support for technology.
Super majority bipartisan support.
And that's, it wasn't anticipated, but it is extremely welcomed.
Totally. And so, like you said, I mean, the SEC's been, the regulation by enforcement, by the press release, all that kind of stuff. A little bit of a political cloud maybe influencing their decisions. We feel the tide shifting. But I want to try and get into, not get into the mind of the commission or anything like that, but try and understand, are they looking at themselves in the mirror and saying, oh crap, things are about to, we lost. I mean, we've been losing in court. We see our future changing. Does the SEC see their future changing? Do you think that there's some hard conversations going on? Because, the head of the SEC wasn't even able to come out and explicitly say, Ethereum's not a security. He refused to say it. But now it's all of their paperwork, all of their filings are indicating that that's what they've decided. And
yeah, I mean, and if you read the release for the approval, in the last footnote, they say, hey, you have to abide by the commodity rules for the various exchanges. And so that is as much of a seal of approval of saying this is a commodity.
Totally.
And so that is there. Not only that, the CFTC had already said it was a commodity, and they listed futures on a commodity. So there were so many indications that this was going to go
break that way
at a certain point. But what is encouraging is how they didn't drag their feet on this, and they got ahead of it. And again, I think it's because the political movements have kind of led in a more positive direction. And so I don't think the SEC is scared. I think one of the, or concerned, I think what they're going to have to do is really just engage in the challenging questions, because you can't just, because it's going to be here. It's a matter of understanding, the principles, why we have certain things. Everyone is pro investor protection.
Right.
And everyone wants, reasonable disclosures, and everyone wants there to be the proper safeguards that are there. But
it's what's made us the 40% of the world's entire capital market.
Exactly.
Right?
But the SEC is not a merit regulator either, right? They're
Sure.
a disclosure-based regulator. They're founded on principles of a little bit of sunshine can be the greatest disinfectant. And so
Totally.
I think what greater form of transparency and sunlight than a blockchain.
Yeah.
And so it really is just a matter of getting back to those principles, but actually having to have the hard conversations, because a lot of the rules and regulations that exist are there reflective of a system that has a number of intermediaries, is fully centralized. And so it works fantastic in that world. I think where we're going in the future, I think likely isn't going to be that market isn't going to exist, right? The existing financial markets are very, established. But I do think if you go back in time, certificates for securities still exist. There was a period in time where they were the dominant form of security ownership.
Wow.
And
paper certificates.
Paper certificates. And that's what caused a lot of the challenges in the 70s, because a new form of technology, telecom, allowed for people to communicate and trade and transact in a much faster manner. What didn't get updated was the back-end systems, right? So what they decided was, hey, let's immobilize these, let's put them all in one place, and then we won't have to run up and down the streets with these or mail them. And so that was the solution at the time.
Wow.
But now we're getting to the point where we have a technology that can disrupt that back-end system, and you're going to have money, and you're going to have the record of ownership being able to be on a transparent ledger, and we have that right now.
Yeah.
It's just a matter of time of updating the system, and then allowing for the certificate. This is just another form. We're viewing this as another form of book entry ownership, right?
Totally.
And so the book entry ownership is on the blockchain in our process, or in the traditional process, it's on DTC's books. And so I think at a certain point, both of these systems are going to be parallelized, and and then we're going to see allow for competition to grow and flourish. And I think that is where the SEC ultimately will get. But right now we're in the stage where we are proving this out. It's going to be better than the existing system, and then we can let the consumers and the investors decide where they would like to invest, and if they would like to own their securities, if they would like to be able to unlock utility with them, or if they like the closed system that they exist in today. And so we're starting simple. We're starting with treasury bills. We're starting with high net worth individuals that can fend for themselves. Mm-hmm. But over time and with engagement, I think we can grow this out.
I love it. And I wanted to just not touch on it too much, but for instance, like the Federal Reserve has a mandate to be apolitical, sure. Right? They can't have any sort of administrative policy in their decision, but the chairman is appointed by a president. And so I guess my question just around the SEC and even the CFTC, is there a mandate to remain non-political, or is it something that, they can be, or does it have to be a little under the table?
They're commissions, right? And there's 5 at the SEC. There's 5 commissioners, 2 from each party, and then 1 from the president's party. Yeah, I mean, look, if you want to take a step back there and historically where the trend lines are, it's not great for being apolitical. Historically, it was, but if you look at recent commissioners, a lot of them have coming from prior Hill experience. I think that can do a few things, right? One, likely more responsive to the will of the people, right? Because they're connected to Congress, and that's a great thing. Mm-hmm. A negative thing could be they're a little bit more adherent to political lines. But I think what we should take a step back from is crypto, decentralized technology is not a political issue, right?
And so, just like the internet's not a political issue
correct.
Inherently.
But it was at a period of time, right?
They almost tried to make encryption illegal on the internet.
Yeah, and the parallels to the founding of the internet and what is going on right now, I think there's a ton of them. But I think what makes the last couple days very encouraging is, hey, this isn't going to be a political issue. This is going to be a progress and a technology issue.
Totally.
And so we're all interested in the same, protections and safeguards that are needed, but we also don't want to be, Luddites and afraid of technological advancement. I think one, the will of the people, right? There's more people that own crypto and blockchain-based assets than own electric vehicles, right? Mm-hmm. So there's definitely a strong push there. And then internationally, there also has been more forthright engagement and active movement there. And so I think that is creating a dynamic of there's both will of the people and external forces that are drawing capital offshore that is making what shouldn't have been a political issue but was definitely a much more positive issue in trying to advance the space.
Do you think that some of crypto's issues stem from the exemptive powers that the SEC was granted from Congress back in the 90s or something, that basically said you guys can regulate and issue laws through these SABs, the staff accounting bulletins, which I'm sure you've written 1 or 2, that they basically made laws for an industry without asking for congressional approval because they had approval from 20, 40 years ago. I mean,
yeah, yes and no. I think look, SAB 121 was a rule. They didn't go through the right process.
Right.
And Congress has acted through Congressional Review Act to come and say guys, you're not following the right process. And I think you can disagree on policy. You can't disagree on process. And if you follow the right process, then wherever you land, right, it was a fair and transparent process. I think that is where a lot of people have some qualms with how this current administration at the SEC has operated. Mm-hmm. So they're going through enforcement rather than actually engaging in difficult issues. They're not following the right process when they're doing staff account bulletins. And so I think historically when you look back at when there's been periods of change, what the SEC has historically done is they've convened all the interested parties, they do roundtables, they have concept releases, and then they come and they reach a reasonable conclusion. Where we're at right now, which is not sustainable and will not last, again, because of the will of the people and the international movement and pressure, is that there needs to be that active engagement, right? It won't.
We can't keep getting stonewalled as an industry.
And that was appropriate and worked for a period in time, but we're past that point.
Yeah.
And so now it's going to be, whoever wins in November, it doesn't really matter because I think there's enough positive momentum on the Hill. And when I was at the SEC, there was, there was discussions by Congress on something, and the SEC staff didn't want, and the commission didn't want to be told what to do, so they acted on it on their own volition. I don't think the exemptive powers are the problem. I think it's the abuse of the exemptive powers, because again, like alternative trading systems, they were a evolution, which is like an exemption from being an exchange. They came about because there was technological advancement, there was engagement, there was incumbents like the national securities exchanges that weren't upgrading and were more rent-seeking, and the SEC stepped in, followed notice and comment rulemaking, and now we have a more competitive and dynamic marketplace for transacting in trades. So you have your exchanges, and then you have your alternative trading systems, and so there's that competitive dynamic. We haven't seen that yet with distributed ledger technologies and digital asset securities. But that is where the arc is moving. There's a ton of excitement here, and on the Hill, there's that excitement. And so, like, I think the next 6 to 12 months are going to be very interesting. I'm not sure if a lot is going to happen before the election, but I do think post-election, there's a lot of momentum, and people like us and other asset managers in the space that are moving the ball forward and actually showing and proving out that the technology can work and can drive utility, I think are going to really be quivers in the air in moving this thing forward.
Totally. Yeah, man, I just think about crypto is such a powerful idea, and in a sense, it takes power from any centralized authority, the government or other enterprises, and it diffuses power back to the people. And that's kind of the will of the people, like you said. Do you think that's that reasoning of this could be destabilizing, this can take power from the government, is that why they were so adamant against crypto, or was it just because there's been so much fraud in this industry?
We didn't do ourselves any favors, right, as an industry,
right,
by having, if you were running an exchange and you were known by initials, you were indicted, right?
Yeah.
And so that didn't do, and other projects that were frauds, that didn't do any favors.
He's
right?
talking about SBF and CZ.
Yeah. So I mean that didn't help, right? But at the end of the day, moving things forward. Sorry, I lost my train of thought.
No, I'm just trying to, get the idea of, this power dynamic between the government and crypto, and maybe that's their resistance.
Yeah, I guess you have to look back at what are the motivations of a regulator, right?
Right.
And so, I do think there's this concept of medicine 2.0, where it's treating symptoms rather than the underlying symptoms rather than the illness.
Right.
I think there's a similar approach with regulators where it's they have a do no harm approach. And so, and something that's unique about this upgrade in the system is we don't really have a crisis, right? And so it's easy to get people motivated when there's a crisis to change things. Otherwise, stasis and incumbency and the existing system typically in a regulator's mind are probably
it's stable, it's propagated.
Are much more palatable, just because you don't want to end up blowing something up, right?
If it ain't broke, don't fix it.
And so, but what we think and what I think this industry thinks is it's so broke you don't even we're so drenched right now in intermediaries and higher costs of capital that we're not realizing because of all these layers of intermediaries, of this lack of transparency, and then this the true unlock is going to be when you have ownership of your assets and you can do things with them. You can use them to collateralize your house. You can do various things. You can, it really changes the dynamic. But that is a sea change from where we're at right now. But it wasn't always this way, right? Like you used to actually own your securities and have them in certificated form and all of that. But we've gotten so comfortable, like credit cards. They're so ubiquitous now, but we never even knew we needed them until they came about, when they were invented.
One of my grandmas still refused to use it until the day she died. She didn't trust the ATMs or none of it.
Exactly.
It's a mental thing.
Yeah, and so we didn't know we needed credit cards until we did. I think we're not going to know the true unlock of tokenized securities and the ability to hold, distribute, and collateralize our lives until we actually push past that. And so bringing it back in the long-winded way, from a regulator standpoint, I think the viewpoint is it ain't broke, don't fix it. But now that there's this groundswell of support from the public and there's international pressure, I think it's finally unhinging those blocks and saying, let's actually have that dialogue and see what we can do here. And it's not going to be an all or nothing, but I do think there's going to be an ability to decide which way to go.
Awesome. No, I'm excited. And on those regulatory bills, is that something that you at Superstate or any of your colleagues, do you guys submit comments or maybe I think it's called an amicus brief to some of these different lawsuits against some of our allies, like Coinbase, your former employer, Kraken, Uniswap? I mean, these are, in my mind, these are the creme de la creme of the crypto ecosystem. Like, why are you going after these guys? I don't know.
Yeah, I mean, look, the only thing I can say is I don't think any lawsuits have been filed in the last 2 weeks.
True.
And so I think there's an inflection point from probably before SAB 121 passed the Senate with its significant votes, and then post FIT 21 passing the House. We'll see where that goes, and maybe we can speak on that a little bit. But at the end of the day, I think from that point forward is going to be a sea change. I agree with your quizzical, approach, questioning of like why bring some of those cases, because I think those are trying to be good actors, and so. But at the end of the day, I think the courts will handle those, and we'll see if a new administration potentially continues to follow through with those, or if we get to a place of more settled and principled approach. And so I think that's, in my opinion, that's the more likely outcome of a lot of those, noise and dust that has been kicked up. And I think this past week has kind of solidified a lot of that going forward. So I don't know why that approach. I think if you're gonna put a gun to my head and say why, I think because the head of the SEC had an idea that he wanted to, cramp down on an industry, and I don't think we don't want to claim victory before it happens, but I think there's definitely a trend line in a positive direction that's moving in the opposite direction of where a lot of those cases were headed. So I think that's I think it's so fresh, it's difficult to get perspective, but I do think that's fantastic. I think now it's up to asset managers like Superstate and other responsible players in the space to engage, to do things the right way, because we are now, we were chasing, we were the dog that's now caught the car. Now it's important to figure out what we're going to do now. And I think we have grand visions and ideas, but I think it's a matter of responsibly engaging and doing things the right way this time.
I couldn't agree more, man. Before I let you go, I got a couple more questions. Sure. I just want to get your sensibility around the timing of some of these things that just passed the House. Now, I'm reading crypto Twitter lawyers all the time, and they've got all their different opinions, right? That it's going to have to go through several revisions that could take a year to get through the Senate. What do you think in terms of timeline on some of these things? Both with the SAB 121 overturning the Stablecoin Act, which people are saying it might be a little quicker, and then the FIT 21.
Yeah, I mean, I think So a few things. One, with Superstate, we really don't need to deal with all of those things because we're clearly a security. We're operating within the regulatory parameters of the existing securities world. I think there definitely can be some updating, likely already within the SEC's ambit, to accommodate for this new way of transacting and facilitation of trades. But I think to be on even more solid ground, there likely needs to be some form of a federal regulator for crypto as we know it. And then this is also useful to take a step back. We're secure. Superstate is doing securities that are built on top of the blockchain. But then there are your digitally native assets like your Bitcoin, your ETHs, your layer ones, your Solanas, et cetera. And I think what FIT21 does is it allows for, they call it life cycle tokens, where you can transition from a fundraising to then go decentralize and then become a commodity and then be regulated by the CFTC. And so I think that allows for the building of the infrastructure. I think where that is going to really take a lot of the uncertainty and pressure off because you can move through that. It's a great first step. It's not a complete step.
Yeah.
You also mentioned the stablecoin legislation. That again right now is regulated through various state regulators, right? And so that doesn't, through money transmission, that works but isn't fully tenable. And again, there's analogs in history from this before. In the late 90s, there was NISMIA, which I don't really know what the acronym stands for, but again, they provided for federal preemption of state securities laws because they became pretty unwieldy to go out and offer in those securities in the United States. I think similarly, we have the incubation of various state regulatory regimes, and I think they've done a fantastic job. But I think what would drive a lot more clarity and reduce a lot of the regulatory cost and burden would be taking the best of all of those and then making that ceiling the floor for the regulations. And so I think then you'll have clarity on stablecoins. You'll have clarity on the infrastructure and how to get those through the FIT21 bill. And then you'll have the SEC really tackling some of these hard issues on, all right, we built rule books and regulations on a existing intermediary heavy structure. How do we ensure that we have all of the proper safeguards in place for this more decentralized way of operating? And so I think taking all of those together, that's where things are heading. So infrastructure, stablecoins,
kind of all simultaneously.
And different people have different pieces to play in all of those. But they're all, I think, trending in a positive direction. And I think it does speak to the continued effort and enthusiasm that the space has always enjoyed.
Yeah.
So it's that effort wasn't for naught, and I think we're not there yet, but you can see how all of those pieces could fit together and how what we're building at Superstate can really do a lot to update and change and unlock a lot of things. But right now, we're in inning one. I guess I feel like on every crypto podcast, there's always what inning are we in?
Right.
I mean, the tortured baseball analogies. I don't think we're going to hit a home run tomorrow, but we're definitely in a long game. There might be extra innings, but at the end of the day, the best team or the team on the right side of changing things will be victorious.
Yeah, I could very clearly see Superstate throwing a no-hitter against against everyone who comes their way. I want to ask, last question, what's next for you guys? Is there anything in the innovation pipeline that you're really excited about? A new product? Anything?
Yeah, I mean, there's a lot of different vectors for us to grow. Like I said, we're a pretty simple fund, and we only are offered to a small subset of investors. I think there's two real areas where we really want to dive in. One is expanding who can access our product, and that goes both internationally and then down the stack on investors.
Awesome.
I think the next thing is, tokenizing something is great if it just lives and sits on the blockchain, it might as well be a potted plant, right? And so like, or a potted certificate, or however, whatever security metaphor you could use there. But what we're looking to do is really explore and unlock DeFi, I think, as I mentioned before. And so that's going to be trying to figure out how you can take your assets that we've now put on chain, now you can transact peer-to-peer, and then you can really use them as collateral and do various other things with them. So I think going broader with where we can go, and then increasing the utility with what we can do with the simple product that we have. And that's just with USTB. Then there's additional products and assets that we would like to bring on chain.
Awesome. Well, hey, Alex, I really appreciate you coming on. Everybody, General Counsel at Superstate. Go check them out, superstate.co.
That's right, not com.
.co, I remember that. And thank you so much for joining us, talking all about everything that we need to know about the future of RWAs and regulation. Got a little look into the crystal ball, so appreciate that. And hopefully we have you back on again soon.
Awesome, thanks.